GM guys. GM guys. So today we're going to be doing a market review, and I'm going to be reviewing I'm going to be showing you how to navigate or trade red folder event on days where we have red folder news event on at 8:30. Okay. Okay. So those are PPI days, those are CPI days, and so those are NFP days also. So I'm going to be showing you an advanced reversal scenario of the $1 million model, and we expect these kind of trades on the very impactful news release days. Okay, so think of CPI, NFP, PPI, and yeah. Okay, you can also apply the same on FOMC days as well if you're going to be trading the PM session, but that's not what I'm teaching here. I'm teaching my $1 million model, so I'm just gonna stick to these, the ones that occur at 8:30. Okay, so we're gonna take it back to the 13th of August, and I do have a screenshot of that day, and I do have the screenshots that I actually um, used to demonstrate or teach my students, or just to highlight, because they already know the scenarios. These kind of scenarios, they already know how to navigate some of them. They already know how to navigate these kind of scenarios. Okay, so I'm just gonna go through it, and before I do, actually, let me try and see if I can open my Discord server here, so I can also show you the execution. Okay. Okay, while I do that, so I'm just gonna do this quickly. Go to just 1 second. I'm gonna get the chart quickly. There you go. Okay, just gonna pull it back here. There we go. All right. Okay. Okay, so we're gonna be looking back to we're gonna be doing a review of the 13th of August, and this is actually the same charts. This is the same chart here, and it's also the same chart. So I'll be teaching using this because I already had annotations on the day. So this is a screenshot of the chart that I had because I was trading live, right? So yeah. So if you look at this chart, I'm just gonna go back to this before the annotations and everything. We opened at 7 o'clock. We opened somewhere here, and then you put in that high, and then you put in that high, kind of forming relatively equal highs, and then you put this high before the news release at 8:30, which also created relatively equal highs with this high right here, relatively equal. So we had these relatively equal highs before the news, and we have a long week. This is a news release, long week, the PPI at 8:30 on Thursday, the 13th of August, called PPI, not CPI, but PPI. Okay, so we had a long week. So this long week is what causes me to anticipate an advanced a reversal or a continuation, but in this case it was a reversal. Okay, so if you know the 1 million dollar model, if you have the PDF, you already know what I'm talking about. You know what I'm talking about. Okay, this is a reversal. So what I do is, normally I look at the bodies. So I'll just do this. If the wick is that long, because wicks are gaps, so you just remove the wicks so that you can see where the majority of the volume lies, right? So you have relatively equal highs, this high relatively equal to that, but also these highs here relatively equal. So when do we clear this bulk or this volume of liquidity? Right there, we do have a body that overlaps these highs. But do you get a bearish market structure shift after that? Yes, but also we are feeling this bullish market structure, I mean this BC here, and we respect it, and then we push higher. We do not invalidate this. Had we invalidated this and then created a new fair value gap, which is a CB going down, then I was going to take that and assume that we're no longer going to come for these highs, this high here. Okay, because this high also took out what, that high, but this high does not fall under it's not after 7 o'clock, but the high that was after 7 o'clock is not even a swing high, it's just a high here. It doesn't stand out like this one here. So had we taken out this, had this far high formed after 7 o'clock, this was going to be a nice continuation. I don't think we were going to go all the way up there, but this is a story for another day. Just leave that. So we take out these relatively equal highs here, but we do not have like we do not invalidate the PC. So we push high, it pushes, it supports price and pushes it high. So once we take out these bodies, that's what I'm watching at that time. I no longer care. I no longer care about the week, because we might not even go as far as taking out that high of the week. I do not require it to do that at this point. I just need to see it. Even it can even reject at the CE, as long as the bodies there's a body close that's gonna close above this, because it's like a volume purge. Think of it like that. It's like a volume purge where majority of the volume sits. So we get that right there. But when do we get the change in the state of delivery or bearish market structure shift after that? After that's happened, we get a change in the state of delivery when we get a body close right there. Okay, I like to confirm it with a body. I know that you do not really require the body to close bearish. If the sentiment is in alignment, if you're in alignment with the sentiment, and if you understand the, then you're most likely gonna get the same trade as me. But it's just that me, I prefer to see a body close, because then I'm convinced that the volume is in my favor. And if you want to think of it as sellers coming in, then you can use that language and logic to actually get in on a trade. So I can already see that smart money is showing its hand, tipping its hand to me that, hey, we are now ready to move lower. So that's exactly what I was actually showing these guys live on Discord on the day. So we had this long week. Um, so in this case, we had to go above that swing high. So normally you'll just leave the high there, because remember, if it's a red folder news event, it's the psychology behind it is that some people are gonna try and chase that going higher as the news release opens, but also these sell stops are triggered, so everyone is trapped just above this high. So sometimes they wouldn't come all the way up to release them. But look at what happened after this trap. So we triggered buy stops here. Obviously, where did the sell stops lie? The recent swing low also triggered, so they were close. So these people are now free at this point, where after dumping these the sell stops above this high here, and then it's like a new range. So that you just highlight the data high and the data low. So that's like a new range that's formed. Okay, and if you understand the logic of the $1 million model or the sentiment, and you look at the bodies that of the volume, where the majority of the volume sits, then you can pair all of that understanding all together to get like a nice trade going lower. Okay, so that's what I was thinking, and telling these guys on Discord that, hey, this is what I'm looking at, body close here is what I'm anticipating. And I actually went short as soon as we closed. And also looking at the macro, the macro coming in, so you can see here, this was just an A plus setup to me. This was a bearish reversal, advanced bearish reversal of the $1 million model. So you can also look at the screenshot that I sent here. So I was looking at the bodies forming relatively equal highs. You have this high also forming relatively equal highs with that high after taking out that. So you had to also again purge that high right there, but you did not get a change in the state of delivery. But also you just got a retracement to the CE here, and then a punch of the bodies that high, data high, and then we got a nice change in the state of delivery respecting that fair value gap also, and then eventually got, so I got a nice entry here, and I pyramided as soon as I saw this rejection because I wanted to see if it's gonna go all the way up and fill that volume balance. It rejected. As soon as it rejected, I went in, and then it just went all the way down. So I was just taking partials here, partials there, and so on and so forth. So here you can see um, this is the same chart but without that wick. So you can see that it's just clean where the volume sits at data lows, data highs, invisible. So this is like a gap. This is how the market sees that wick. So you just remove the wick, look at the volume. So it's like an advanced reversal because of like you ignore the wick, especially. So how do you know that how do I know that I should remove the wicks? If you have a long wick clearing liquidity and the body is remaining way below that, forming relatively equal highs. So this is how you know. This is how you know, because sometimes you'll have like a small wick, maybe a wick that's like from here to here, taking out this buy side, and you'll see me getting into that trade because the wick is not this long. You understand what I'm saying? So yes, sometimes I will never, I won't require a body to go above that high or the body high here, but you'll see me getting into the trade because I understand that the wick is not this big. Like if it's this big, then you have to wait, but if it's not, maybe it's like this long, then you see me getting into that trade. Okay, maybe if it's like this long, okay, I'll just take that trade. Okay, it's fine, but I don't want to see bodies leaving relatively equal highs. If I remove the wicks, ideally I will just skip that trade, just to be on the safe side, because I'm not in the business of losing money. And from that sell, I mean, when we closed bearish here, it was at 850. So this is the candle that closed here exactly at 910. Sorry, the 850 to 910 macro. This is not a coincidence. The candle that overlapped and closed below the opening price here was the 910 candle. So the macro completing giving me the confirmation to say, hey, I'm actually now ready to punch lower. And you can see here, this is me telling the guys on Discord Thursday, the 13th of August, PBI. This was an advanced bearish reversal entry, change in the state of delivery inside the macro. And this is the chart that I shared on the day. And okay, don't worry about it. This is my execution, right? As soon as that candle closed, um, okay, this is like a 2 minute chart, so you can't really see, but it's exactly right there. And then I executed another one, pyramided inside the pyramid. I had like a pyramid entry. As soon as we left that fair value gap on 1 minute, as I told you. First partial below pre-market range lows, a second partial, and then the third partial. I just closed everything because of time here. I had to go somewhere, so I just said, okay, let me just kill everything so I can be free. Okay, and that's exactly what you are seeing here. And you also had the partial that was taken at London lows. Yes. So, and then after that, London lows were taken. We had a nice retracement, deep retracement, and then again it came all the way down. So I think I do have okay, I don't actually. Oh yeah, I do. That was the opening price at 8 and 9:30 that was reclaimed or retested here, and then we continued to lower after that. So it was a nice, really nice trade of the $1 million model. I really liked it. So now we're just gonna review or look at what transpired today. Today I was not trading, but my friend did trade this because I was with him. So I just want to highlight a few things here, guys. If you understand this is like now me sharing the Asian model, Asian, uh, the juices for for Asia. How do I know that Asia is gonna give me um low of the day? Okay, or high. Okay, sorry. This is like in South African terms because this is like Asia occurs at 3 just after midnight in South Africa. So I get this whole price range in one single trading day. So I know maybe you guys are getting confused when I say Asia is gonna form low of the day. Like what the hell? Because this comes way before midnight, where you would start trading for that whole day. So this then becomes what low of the day. But in some cases, yes, I would just mistake this as the low of the day. When in fact, the low of the day was this entry here. So I caught the low of the day here. My friend caught the low of the day because I told him what to look for, right? So I've been teaching these guys this model, guys. I'm very excited that people are now understanding it. But yeah, just put that aside for now. So what happens here? We open and then we rally and then we drop and then we create this whole range, which is like an impulse move. Above that, that's a bullish market structure shift, and then you consolidate. Now, where do you manipulate? 7 o'clock, you open and manipulate low inside this fair value gap. This is a guided sell side liquidity because of that, but also because of time, right? This low was formed after 7 o'clock. Okay, so this was going to be my entry. My entry was going to be somewhere here if I was awake during Asia because of my model. After 7 o'clock, we take out the initial sell side liquidity, which is the lowest low between 6 and 7, and we target the highest high right there, right? But also the same could be done after 9 o'clock. Okay, we just have to understand the time element of it and the market structure element of everything. When those two um, are in agreement, then you have a high probability trade, right? So we have this fair value gap at discount below sell side here, but also we are trading down $1 million model. So what do you see? What do you know? You already have that idea that okay, we displaced above and went all the way up, creating that impulsive move in Asia, and you have that Asian buy side liquidity right there as your best case terminus on the day. And now you just wait here for pre-market range sell side sweep inside the macro because we do not have red folder news. So this was yesterday now, right? So it was Monday 17th of August. No red folder news. As you can see, we rely on the macros and we want to trade pre-market. So the 750 to 810 macro, if the structure is not in agreement with what you are looking for, then wait for the 850 to 910 macro. That's the last macro before is equities market open. So that's the pre-market range macro. This is what you see here. So you'll find the trade right there. 50-minute fair value gap filled, partially so. It does not even make it to the CE of the fair value gap, which gives you an idea that it's actually really, really bullish. And then inside the macro, what do you see? You see, we take out this sell side. This is after 8:30. 8:30 is we open right there. We take out this relatively equal lows right here, and then you keep dumping, fill the fair value gap, changing the state of delivery here. You enter on that candle close. Don't even need to wait for it to fill the fair value gap. That's what I teach. If you see that the candle that's causing the change in the state of delivery is tradable, and you could have just gotten yourself a nice 8R. Okay, my book got like a 7R-ish somewhere here. Nice trade. Okay, so I pointed it out to him before I left his house. I was like, okay, this is what I'm going to be watching, and I thought I was going to make it in time. I was going to make it in time to catch something somewhere here when I get to my office, but I was late. Okay, so I got in. I sat down around when it was already pumping higher here, so I was late to the party. Couldn't catch that, and I was like, okay, it's fine. I wasn't ready. I wasn't really in the mood to trade anyway. So, but yeah, that was nice, and it went all the way up to Asian buy side. So this is like a bullish reversal, not an advanced one because you don't need the bodies. You don't have a long wick taking sell side here. It's just a normal bullish reversal, and the time element of it is just beautiful. So I don't have the screenshot to show that he didn't share the screenshots on Discord, but I did share the notes here that, okay, guys, we do not have a red fall news. We trade the macro, and the entry was found inside the macro here. This is just an easy model, and this is what I wanted to show you guys, and I hope this was insightful. I don't want to make this video a long one, and it's already like what now, 21 minutes long, so I'll just keep it here. All right, guys, so I'll be seeing you guys tomorrow um on Discord. All right, and yeah, if you've got any questions, you can send them right through. I'm watching the chat, and yeah, if not, then yeah, I'll see you tomorrow on Discord. And I hope the sound and everything is good that side. So without wasting any more time, guys, I see there's no questions. Okay, just leave a like if you enjoyed this video. Just like the video, and I'll see you guys on the next